Let's put the spotlight on the rupee first, and the currency has surged to its highest level since 1st of August, which is near 8-month highs. The currency also rallied thanks to the strong show in the equity markets. The rupee on your screens has ended the day at 60.77, which is nearly 0.25% on the higher side. Let's get on board then. Vijay Bhamwani, who's author and CEO, bsplindia.com. Also joining us is Ashutosh Khajuria, who's President, Treasury, Federal Bank. Thank you, gentlemen, for joining us. Ashutosh, to you first. And what a stellar performance that has continued from the equity markets and clearly giving support to the rupee.
Yeah, I think it is at all-time high. Intraday movements of both NSE and Sensex both have created records. And on the other side, after 1st of August, as you have rightly said, dollar rupee also saw moving towards, 60.50, that direction. In fact, it touched 60.6667 levels and all. And I understand that there would have been some buying being done by maybe central bank, quite likely, because PSBs were seen bidding for greenbacks. So I think it's quite likely that RBI may like its reserves to move up beyond $300 billion or so shortly. I think the previous figure was somewhere around 297 or so. And I think it's right to do so, because if you see capital flows, FII flows have been around $8 billion since 1st of January 2014, of which about $6 billion have come in FII debt alone. Around $2 billion have come till a couple of days back, till Friday. The number was around $2 billion, nearly $2 billion in equities also in this calendar year. So if this type of hot money is coming into the country, I think it's all the more necessary that we have a reserve chest to just counter it when there is any bad news or some outflow happens, so that the volatility is contained, and even the weakening of rupee, if it happens in days to come when the capital flows go out, it should be graded, it should be smooth, and should not bring in the type of panic which we saw in this financial year, particularly during the months of July, August and September.
Ashutosh, as has been the trend, of course, the Indian equity markets have a big role to play. But apart from that, every Chinese data on the weaker side has led to money flowing into India. How sustainable do you see that as well?
Yeah, I think the international investors feel that the growth has bottomed out in India, and after having reined in the current account deficit, which I think the numbers for previous 3 quarters in this financial year are available, and these suggest that we are somewhere around $30 billion, till now in first 9 months. I think I would not be surprised if we end the year at around somewhere $40 billion for the entire financial year or so, which as against $88 billion last year would be a commendable, reining in. And at the same time, I think red line for fiscal deficit has also not been breached. So I think international investors are looking at what the intent is to control those imbalances. And as a result of that, more and more confidence is getting built up in investing in India. And I think the rest of it is all because of the opinion polls and all that about the Indian polls. I think they're looking at stability and more than that, where the deliverance happens.
Not so much in Jan, Ashutosh, but Feb saw a gain of 1.5%. March has seen 1.7% of a run-up in case of rupee till time. Do you see the strength continue as we start the next quarter, and where do you see the immediate resistance coming in?
I think presently it is being led by capital flows, and that too under FII category. I think this is not very good for the economy, because this is hot money. This may go out. So as a result of that, I think there is a need for building up the war chest. And suppose if it takes a U-turn and all, the central bank should be in a position to stabilize the exchange rate and reduce volatility to the extent possible. So I think if you see the numbers, I'm not surprised on the debt side, because FI debt inflow is nearly $6 billion now. And consecutively for 3rd month we are seeing positive flows. It was there in January, it continued in February, and I think in March also till Friday it was $1.3 billion. So that shows, I think, these levels, yield levels are quite attractive for FIs to invest in. And when the yields actually fall, there is a possibility that these investors would like to book their profits and they would take their money back. So I think it's because it's coming in on the debt side, and when the yields are high, in anticipation of future rate cuts or so, a lot of money is flowing into India. If that happens, I think they definitely would like to book their profits and take back this money. I think it's therefore all the more necessary that the intervention also happens and dollars are mobbed up to face such a situation.
Vijay, getting you in the conversation, what's your sense now coming in for the rupee?
Manisha, the rupee has been very well buoyed by a firm equity market, and with the equity indices hitting new highs, the rupee is also deriving strength. So the hypothesis that I had been putting forth so far, that before 31st of March there will be a spike up in the dollar, which I later modified to a muted rally, seems to be now easing out. I think the scope for appreciation in the dollar before 31st March seems to be receding, and receding fairly strongly. I think the rupee might just appreciate to the 60.20, 60.25 kind of levels in cash. If at all you do take a punt on the long side on the dollar from there on, I think you could go to 61, 61 and a quarter. But the rally in the dollar before 31st March, that is increasingly losing momentum. The possibility of it really being a tradable or bankable rally is now receding. So the dollar bulls are likely to be on the ropes. I think it would therefore become a higher risk trade to buy the dollar on declines.